Hey everyone, Dalton Grados here with another weekly market newsletter for this week of January 5th through the 9th of 2026. It's our first newsletter of the new year. And if you want to see my market outlook for 2026 and things to look out for, I will link that video here. It should be appearing in the top right corner now, so you can go watch that as well. But today we're going to resume our normal newsletter looking at the week ahead. So we've covered our big ideas to look out for in 2026 as a whole. Now we're going to zoom in and look at the week ahead, starting of course with price action on the S&P 500 cash index. And we see here, we've been in this range, right? This large range between the 6520s to 6900s. And we've started to develop a series of higher lows here. So I drew this trend line here. And on Friday of last week, we had a drop down and very nicely respected our trend line here. And so what we have forming is a wedge of relatively equal tops and rising bottoms. And so we're getting this ascending wedge here. Still definitely a consolidation pattern, but what we're going to look for very simply, to the upside is a break out of this wedge here to the upside, or if we break and hold below this trend line, if we got a daily candle closing below this trend line here, down in the, what price point would this be? Like around the 6800s over here. Then we can start to see, some more movement down towards the bottom of the range, targeting, 6750s and then 6500s. So those would be, really the levels I'm looking out for heading into the week. Keep in mind, we're still starting, this is the first trading week of the new year. So we're still starting off, fresh with traders and institutions. The big money players really coming back to work, starting off with fresh P&Ls for the year, right? So trading might be a bit thin still until we get, several weeks into the new year. But historically, Januaries are relatively positive. And, until this trend line breaks to the downside, I have no reason to not have a positive outlook. And I would expect that if this trend line continues to hold as it has been, that we should see at some point a break up to new all-time highs. Now let's go ahead and go through some key events to look out for this week. Starting on Monday, 10 a.m., we have our manufacturing PMI. Very simply, above 50 is economic expansion, below 50 is economic contraction. We've had readings below 50 for the past several months. So why that it can be good for markets is it's indicating supporting the narrative for a weakening or contracting economy, would further support the narrative for continued rate cuts. We've talked about this almost in every newsletter, so you're starting to get the picture here if you've been following. But specifically, the manufacturing PMI is basically what the manufacturing purchasing managers are purchasing for supply. So it's a leading indicator for economic health in how smoothly the economy is moving with our purchases from manufacturers. Then on Tuesday, nothing. Wednesday, we have our JOLTS job openings. Same type of thing. This is an economic health indicator, not. Oh, and we also have services PMI. So very similar type of thing, just instead of manufacturing, it's for services. Similar read above 50. Now, which is interesting here is this number has been healthier, above 50. So all these data points are to be taken in context. No data point is to be taken too deeply in its own right, but more in the context of all other data points. So services PMI, above 50 is expansion, below 50 is contraction, and we've seen that number be better. So mixed data reporting here. That's what's coming out on Wednesday. We also have the JOLTS job openings. Again, this is also an economic health indicator. So if we are seeing disappointing, job openings, that would indicate cracks in the economy, further supporting a Fed rate cut. And these are all just one data point among many. So, no one data point, like I said, is super significant, but things to pay attention to as we head into this week. Our most important data point here is going to be non-farm payrolls. This is really something that the Fed pays a lot of attention to. That's going to be on Friday at 8:30 a.m., right? And simply, this is the change in the number of employed people during the previous month, excluding farming. So basically everything else besides farming. So this is a big number here. We want to be paying attention to that. And we also have on Friday at the same time, our unemployment rate comes out. So that's a key indicator. Again, bad news is good news for the market for supporting that Fed rate cut narrative. As far as earnings this week, there is no significant earnings that would move the market, so I wouldn't worry too much about earnings. We're not really heading into earnings season quite yet. And of course, the big story over the weekend with the America capturing the Venezuelan dictator and what that means for the market and specifically oil prices. Now, crude oil futures are going to open at 6 p.m. this evening, about 3 hours from now, from the time I'm making this video. So we'll see what happens there. We could get a strong pop and then likely a settling of the dust after that. That's usually what will happen when these type of events happen. Is you might get a strong pop, and then things will start to settle after there. So I'd be monitoring for crude oil futures. It's expected that they could potentially spike, as these type of events tend to lead to some chaotic price action. We're just reacting off the news, but again, only in the short term. I don't expect much over the long term because nothing has actually happened yet. We're just reacting to this, U.S. taking over Venezuela and their oil reserves. So I expect that could potentially lead to a positive drift in the overall market this week, in the overall S&P 500. That would be a reason for this trend line to, I would say, continue to hold, as you have some positive catalyst there with the crude oil potentially, causing a bump in the market overall. So I'd be monitoring for that. I'm not a crude oil trader, so I'm not, too much of a specialist on crude oil, but something to be monitoring for, especially as the futures open this evening. We can get our first looks at that price action and see, how it's affecting the S&P. So that's it for this week. Again, trading is likely to be relatively lower volume continued into this week. But unless this trend line breaks, I'm going to be looking to hold my bullish positions, continuing on with the trend there. So that's all I had for this week. Make sure to like, comment, subscribe, and if you're not already, subscribe to the newsletter. First link in the description of this video. It's a free newsletter that I do every week, just like this, for you, delivered directly to your email inbox. I will see you guys next time.